the back of the new launch with regard to the mutual fund that they've launched. Rishi, hi, very good morning. This is Harsh here. Give us a sense on the rationale, the launch at this time, an arbitrage fund, I believe.
Yes. We have the Arbitrage Fund NFO later this week, 9th to 11th. And arbitrage is a large category, right, across all mutual funds. And, given how we started at Jio BlackRock AMC with initially the cash funds and then the index funds and then the FlexiCap Active, this was sort of a logical next step because, arbitrage, while falling into equity category and thereby getting tax benefits, is pretty much a fixed income kind of product because of having zero risk completely. So given how yields are right now, which have reduced, in the very liquid kind of category, this becomes interesting that without any risk, you're able to get higher post-tax returns. And it was a sort of a logical next step compared to the other launches that we've done. So as a combination of those reasons, we are launching this fund right now.
But Rishi, give us some insight. What could be the factors which could drive spreads and thereby better returns for investors?
Sure. So see, arbitrage fund typically has a couple of factors. One is obviously the overall yields and rates in the market. The arbitrage fund returns also go up and down with that. And then, of course, the bullishness in the market, or the sentiment in the market rather, because obviously there's a lot of retail and HNI participation in the futures market, which pushes up the spreads, when the sentiments are high, and slightly down when it is not. So obviously, when sentiments are very high, those spreads being extra high on the future side means that arbitrage fund returns can be very strong, which we saw in 23, 22, 23, 24. In fact, over the last year, at different points in time, it's been a little dampened, but it's again started improving a lot in the last 2 months, given the slight uptick in the market. And of course, the third thing is the volatility. So the more the volatility, in the market, there are chances to sort of not make higher returns just by the spreads, but because, you may have higher churn where you are entering and exiting and thereby making even smaller returns, but then, rotating it more number of times. So that also helps finally. So I think the first two are the larger reasons, but the third also becomes an important reason when the markets are dull.
Rishi, give us a sense on now the 30,000 feet view. How are you looking at Indian markets at this point? How attractive or not so attractive are they looking? Earnings re-rating, when are you penciling that in, and therefore how do valuations stack up?
Yes. So on markets, I think, over the last month and a half, I started getting slightly bullish. I mentioned it in some other forums and media as well. And there were a couple of reasons for that, which sort of is now starting to play out as well. Of course, the markets being down to dampened over the last, year and quarter since September, October 2024 was because it was overextended at that point in time, both, valuation wise, technically from all angles, there was overextension done on the upside. And therefore, I think a healthy consolidation was needed, which, we've seen till recently. And of course, that coincided with the earnings growth, right? I mean, finally, markets upsides and downsides will be correlated to the earnings growth in the long term. And we did see that earnings growth was very strong in 23-24, but then post September, October 24, for 4 or 5 quarters continuously, we've been seeing earnings, decline and projections coming down compared to what people are expecting. And now the previous quarter is the first time that, there's been a very minor uptick, whether you look at upgrades versus downgrades or overall earnings expectations and growth that has come in. So it looks like, broadly that earnings degrowth cycle is sort of over and it's just started ticking up. And the next 1 or 2 quarters also, the indications are that this will improve further. And as that happens, I think markets, will have a tendency to bounce. Over the last month and a half, I've been mentioning that, based on last quarter's results being slightly better and heading into a positive seasonality, because November, December, typically markets do tend to, on the margin, bounce. So as a combination, we'll tend to go up, which it has largely done so. And according to short-term expectations, I would expect that markets will sort of trend slightly upwards only the rest of this month as well. January, February typically ends up having some volatility in the markets. And for us also, if December ends up being good, there could be that volatility again. And of course, some of it will depend on whether the tariff-related uncertainty is over or not. I think it's been around for a while, so markets have sort of digested it. But finally, as news comes out, the final overhang will be over. So that would help a lot. But if there is flip-flop on that, that would sort of also lead to some volatility. But post February, from March onwards, my belief is that, as you see the earnings in the December quarter and some initial expectations of the March quarter coming in, combined with the overhang getting over at some point in that period, we would, be looking forward to 1 or 2 very strong years for the Indian markets post that.
Interesting. So, Rishi, what are the factors at play, do you think? Because even though the index just recently made that all-time high, there's not much cheer because, that's not been the case with the small and mid caps. When do you think a more broader and more durable move would come in when mid and small caps also would participate?
Yes, so it's very interesting, both again from a fundamental perspective, if you look at the overall earnings, then it's, the mid caps have actually done very well even this financial year. And for the next financial year also, the earnings growth expected is the strongest for the mid cap category, followed by the large cap. And then small cap comes in the end, both for this financial year and for next year. And even when I look at price-based technicals or other quant models, it is looking like similar indications, because their large cap, mid cap sort of similar, but small cap comes much, behind both of these segments. So I think the signals coming both from fundamental and technical side are that large caps and mid caps will be much healthier, and small caps will take some time. We must remember that last many years, the small caps have done phenomenally well. And when you look at a 20-25 year period, it's not as if, small cap ends up giving much higher returns than the large caps. So it ends up being very cyclical for how the small caps perform. And if they have performed extraordinarily well in a trailing 5-year period, typically, the next few years, they could do a little poorer than what people would expect. So I think it's in line with that. You could expect another, 6-9 months of the large caps and mid caps do better than the small caps. So that is one thing. And then on the recent bounce in this large caps, obviously that was pending because they had underperformed for some time, and the initial signals of earnings growth coming in obviously have been good on certain large caps and the sectors. And therefore, that was sort of an underperformance that was there that needed to do some catch up, which I think it started doing. So I wouldn't rule out, till Feb, March, like I said, when overall, there's more confirmation on the earnings growth. Till then, the large caps still are outperforming. But overall, obviously, comfort on mid caps is also pretty high. Small caps, not so high. There will be pockets, you'll have to pick and choose very, very carefully.
And Rishi, how are you playing the consumption theme in India?
So on consumption, I think, overall, the autos are what are, looking clearly good from all perspectives. I think FMCG is sort of mixed. It's not so exciting. But for us on the overall sectoral side, from consumption, auto was definitely a standout going forward. Recently also been a strong performer, but more important from the next 1 year perspective, it's looking one of the strongest sectors. Other sectors, of course, banking financials is looking good. Again, in pockets, one has to be careful. But yeah, overall, I think trends for the sector after a long time are looking much better as well, combined with all sorts of measures, both, government has done, RBI has done, etc. over the last year.
Right, understood. Rishi, great to have you on the show. Thank you so much for your time today. Good to get in all the insights.
Thanks. Good to be on this show.